Everyone is telling you to get an LLC. Your cousin has one, your friend just formed one, you've seen it all over TikTok. But here's what nobody is telling you: an LLC might not do what you think it does, and depending on your situation, you might not need one at all right now. Stay with me because by the end of this video, you're going to know exactly what an LLC is, what it actually protects you from, and whether you need one for your business. Hey, I'm Paulette with PRF Tax Service, and every week I break down real tax and business strategies for freelancers, gig workers, and small business owners. If you're new here, hit subscribe. New videos every Tuesday and Thursday. Today we're talking about LLCs, what they are, what they're not, and whether you actually need one. So, first, what is an LLC? LLC stands for Limited Liability Company. It's a business structure you register with your state that separates your personal assets from your business. That's the key phrase: separation of assets. Here's what that means in plain English. If someone sues your business and you have an LLC, in most cases they can only go after your business assets, not your personal bank account, not your car, not your home. Without an LLC, if you're a sole proprietor and someone sues you, everything you own is on the table. That's the main reason people form LLCs: liability protection. But here's what an LLC does not do that most people think it does. An LLC does not automatically save you money on taxes. I know, you've heard otherwise. But let me explain. By default, a single member LLC is taxed exactly the same as a sole proprietorship. The IRS calls this a disregarded entity. That means all your business income still flows to your personal tax return, and you still pay self employment tax on every dollar of profit. Nothing changes tax wise just because you formed an LLC. Now, an LLC can save you on taxes, but only if you elect to be taxed as an S corporation. That's a separate election you make with the IRS, and it comes with its own rules and requirements. That's a whole other video. And I will be covering that soon, but I want you to understand that the LLC itself is not the tax strategy. The tax election is. So, when do you actually need an LLC? You should seriously consider forming an LLC if any of these apply to you. Number one, you work directly with clients. If you're a freelancer, consultant, bookkeeper, photographer, or any service provider who works one on one with clients, there's always some risk of a dispute or lawsuit. An LLC protects your personal assets if that happens. Number two, you have significant business income. Once you're bringing in consistent money, it makes sense to have that separation between your personal and business finances. It also makes you look more professional to clients. Number three, you have personal assets to protect. If you own a home, have savings, or have assets you can't afford to lose, an LLC creates a legal wall between those assets and your business. Number four, you're ready to open a business bank account. Most banks require an LLC or other business entity to open a true business checking account. And having a separate business account is one of the best things you can do for your finances. Now, when might you not need an LLC right away? If you're just starting out, making very little income, and have minimal personal assets, you can operate as a sole proprietor while you get things going. The filing fees to form an LLC vary by state, anywhere from $50 to $500, and some states also charge annual fees to keep it active. If you're not generating real income yet, that cost might not be worth it right now. But here's my honest advice: don't wait too long. The protection an LLC gives you is worth it once your business starts moving. How do you form an LLC? The process is simpler than most people think. You file articles of organization with your state, pay the filing fee, and you're registered. You can do it yourself on your state's Secretary of State website or use a service like LegalZoom. After that, you'll want to get an EIN, that's your employer identification number from the IRS, and open a business bank account. One important thing: once you have an LLC, you have to actually use it like a separate entity. That means keeping business and personal expenses completely separate. No mixing. If you mix your personal and business finances, a court can pierce the corporate veil, which means your LLC protection goes away. So, to wrap it up, here's what you need to remember. An LLC protects your personal assets from business liability. It does not automatically reduce your taxes. You may need one if you have clients, consistent income, or personal assets to protect. And forming one is simpler than you think. And if you want to talk through whether an LLC makes sense for your specific situation, I have free 15-minute consultations available. The link is in the description. And grab the free tax savings checklist in the description too. It's a great starting point for understanding what you can deduct as a business owner. If this video helped you, drop a comment below and let me know. Are you currently operating as a sole proprietor or do you already have an LLC? I read every single comment. Subscribe if you haven't already. New videos every Tuesday and Thursday. I'll see you in the next one.